So today I'm going to talk about a stock that I completely sold out of. It's not often on YouTube I talk about stocks I sold out of in real time, but today I am doing that. I'm going to go through the reasons why, because when you sell a stock, you learn so much. You learn what went wrong if you sold it for a loss, but you also, if you sold it for profit, you learn about what was the reasons why it went so well, and then you take that on in future investments. And as well as that, it was just a bit of a slow news day in general in the stock market, and I thought this would be a good topic to talk about. So I am going to go through all those reasons in a little bit. First of all, probably the most significant point that happened today is the ADP small businesses job numbers came out, and we actually saw a cut of 120,000, which was a big surprise because we were actually expecting a gain. This is obviously quite concerning because small businesses are the ones that tend to feel the economic environment a lot quicker than the bigger businesses. Bigger businesses normally have more sticky platforms, products that most people need. Small businesses are always vulnerable to big significant shifts in the economy, and the fact that there was so many job losses in that time frame, obviously the warning signs are obviously ringing at the moment. Now, if you look at the markets didn't really care. The markets are actually slightly green today. So why did that happen? Well, because people are looking at that and going, oh, there's another key point why the Fed needs to be cutting the rates at the moment. So the market was happy because it gives more kind of, what is the market at the moment wanting? It's wanting the rate cuts. That's what it wants to see the market go higher. And the fact that we had news today that would support a rate cut, obviously, the market is happy about that, and the rally is on. It's pricing in that rate cut now. It wants it. And you also look at the point of view as if the rate cut doesn't happen, or in typical fashion, if all of a sudden Jerome Powell starts going, well, that's it, no more rate cuts for the next few meetings. You can see how the market can react. So it's certainly in a sensitive place at the moment, is the market. But I've got to say, we've got to start seeing these rate cuts happening. When you look at the United States unemployment rate, you look at the trend is your friend. And you look at the trend here, the trend for the unemployment rate has been going up and up and up since interest rates went to the 5% highs. And that is slowing the economy down. It's doing what it's supposed to do when you put interest rates up, is slow the economy down. And that's what's been happening. And there's only so long that you can keep the interest rates so high, and it will really start affecting the economy. And you can see here that it's not been even a recent trend. The trend has been going on for the last couple of years now. And if you want to break the trend, you got to do something about it. And if you just sit there and don't do anything about it, then that trend is only going to continue. So this is why I always say for a while, I'm still very surprised that the Fed have not been, quicker to cut rates, because a lot of the key data that you see out there, the trend is certainly going in the wrong direction that you'd want it to be. And the only way you can break a trend is by doing something about it. And at the moment, they're not. So, we can't act surprised that we are starting to see this economic data that we are seeing at the moment. Anyway, getting on to the stock that I did sell. So today I decided to sell my Aviva position. We did quite well from Aviva. This was the post that I put on the private group earlier, which said, hi all, made some moves this morning. The first one that I put up there was Aviva, sold it all, 60% profit, 80+% with dividends, which is not too bad at all for a very boring, what you'd say if, people say you have to buy exciting companies to make money in the stock market. Not true. People say you can't buy UK stocks and make money in the stock market. You can't make money on UK stocks. That's not true. Aviva comes on the list of a UK stock and a boring UK stock, and look at the performance. 60% return, 80% if you include dividends, because you do get a 5% dividend yield, but with the average that I have, I'm getting an 8-9% dividend yield from Aviva. I started buying Aviva originally in 2023. The stock had a pretty significant dip, and in general had just been trending sideways for a couple of years, and then recently this stock had been on a really good run. No surprise though, I was listening to the CEO, I was looking at how he was going to turn around the business and the plans they had, and I thought, what, I like this here, and I started building up a position in Aviva. The problem is that I only had a couple of months to buy it, and then it started having a pretty decent bounce, so that is one of the significant reasons why I did really sell Aviva is that I just didn't build up a position in Aviva, and that's why I decided to sell it. And sometimes you have those instances where you don't build a position up in time. You start buying a stock and it bounces, and you're like, oh, well, I only bought part of my position. You'll have it the other way. I'm sure some of you guys have, I have some the other way where you start buying a stock and it goes lower and lower and lower, and you keep averaging in, averaging, averaging. And in those point of view, you're going, is it going to ever stop? And you can also have the point of view where a stock can go sideways for 6, 12, 18 months, 2 years, and you're like, God, this has just been going sideways. And those times you have so much time to build up a position, and even sometimes you start questioning yourself if you start making the wrong decision. But you'll also have those stocks as well in the stock market where you're buying and they shoot up, and you're like, well, I never got the position I built or wanted to build. And that was the case with Aviva. So Aviva, for a while, I think I got about half a position that I wanted. And I thought, you know what, I'll just let it ride. And I've let it ride for the last 2.5 years, 3 years. And I've got to the point of view now where I've gone, you know what, I've made the money that I want to make. Let's maybe move away and lock in the profit. And the thing with Aviva is, it was half a position that I wanted. And from where we were in 2023 to where we are at in now 2025, which is, 2.5 years time frame, my average position size, obviously it's a smaller position than what I normally have, about half the position. But in the last 2.5 years, as you guys probably have been following the YouTube channel, the last 2.5 years have been absolutely amazing for us. 2013, we had a cracking year where, we returned over, was it like 40, 50%? Same in 2024, same in 2025. We've had years where we've returned 30, 40, 50% in the stock market. And because we've had so much good years in the stock market, and on the way we've sold a lot of stocks for money, now when I buy a new position, my new position size isn't what it was in 2023. When I'm buying positions now and I'm building positions up now, they're probably, I would say, close to double the size of where I was building in 2023, because we've got so much more money to play with. So my Aviva position now, realistically, is like a quarter of what it normally has been. So because of that, I'm like, well, is there any point having Aviva? I look at that, and sometimes you just have to look at your time management. You guys know me. At the moment, I'm running the YouTube, I'm running the private group, I've got, property investments, I've got the job that I work at, an 8-month baby at home, and there's only so much time you have. And I've already got like a significant amount of stocks, 30 stocks or something like that, probably over 30 stocks. And there's a point where you have to manage your positions. And you have to go, you can't keep going for, this is why I always say like 30 is a good amount, because if you start going up to 40, 50 stocks, to manage all those positions, to read their earnings report, you start taking your eye off the ball a little bit. You're not dedicating the time to like look at them all, look at those earnings, and how have they done. You really, I want to be in a position where I can give 100% commitment to the stocks I own, and if I can't do that, I've got too many stocks. And I think I said on my UK portfolio review a few weeks ago, I said, I feel like I've got a bit too many stocks on the UK market. I need to sell some. And I've been looking at Aviva for a while, but significantly over the last few days. And I've just gone, if I was to sell a stock, it probably would be Aviva, wouldn't it? Like, I like Aviva. I still think it'll do very well. It's just the position size just isn't worth the upkeep. And there'll be times where you guys probably come across that situation where you go, is it worth your time to read all the earnings report when you don't really have that much capital allocated to it? You might like the business still, but at some point you're going to go, is it worth it? Or to make it worth it, you're probably going to have to average up. Do I want to average up on Aviva? Probably not at these levels. So that's where you have to go and think about, is it time to sell it? And I could hold Aviva. I could sit in my portfolio, and I'm sure it would do well over the next couple of years. And a few people do that. A few people wouldn't have the winners, especially some of the guys on YouTube. They'll just, if they had a stock like Aviva up as what I do, they'd just sit in the portfolio and leave it for the next 2 or 3 years and go, look, I'm an amazing stock picker. But I've said to you all, I say to you all the time, guys, like, for me, the main thing for me is making money in the stock market. I don't really care about coming on to you guys, and when I do the stock portfolio reviews, it looks all pretty, and I've got all these green stocks up amazing amounts, and I've sold out all my losses just to like make it look better. The main thing for me is looking at the market going, is it worth my time? Is that cost there productive, or could I use that money now, put it into some other stocks and go make more money from them? And I think that's the case with Aviva. And the other thing as well is that even though financially it looks pretty good, growth looks great going forward, revenue growth, profit growth looks great going forward. Financially, it still looks amazing. I think Aviva will do well in the next few years. And if Aviva was to have like a 20-30% drop, I tell you what, I'd be like thinking about buying back in, and hopefully I can get my position built up this time. But realistically, next year's numbers, 12 times forward earnings. What's Aviva historically traded at? Well, Aviva has historically traded around about 12 times earnings. So it's like bang on what it's normally traded at. And I think when I was first buying Aviva was like 6 times earnings. Aviva's dividend yield was like 8%. So I've got the metric expansion that I originally invested for. It's just whether or not I just sit while these financials perform. And I always like getting into stocks where I have the potential for metric expansion. Like Greg's is like 10 times earnings, and I think that should be 15 times earnings. Those sort of companies. And I've kind of ticked the box with Aviva ultimately. So yeah, I think it was right time to just move away from it and lock in the profit. But as you guys know in the private group, then I took the money out of Aviva. I actually sold a couple of stocks today. Not complete sales, but trimmed. And it just creates that little cash pile, that bumper pile, and I can go invest it into my new opportunities. And that's what I did. Obviously you guys in the private group know that I sold my Aviva position completely. I trimmed another 3 positions, and then I went on a little bit of a shopping spree. I thought, I've got all this money here. I see a few opportunities in the market. We'll go put it onto these new opportunities, and hopefully a few of them are the next Avivas where they go on to make some good money for us. And obviously I will reveal them on the YouTube channel when about the ones that I have bought. Obviously we're in the December though now, so obviously those stocks will appear on the January edition of the UK and US stocks that I'm buying around about the 1st of January time. If you want to see what I'm doing in buying and selling in real time, guys, though, you can join the private group. Don't forget the prices are going up in January to reflect the performance and the amount of exclusive content that we put on the private group right now. If you do want to sign up for the yearly, guys, you do click on become a member. It says £6 a month. That's going up to £7 a month in January, guys, if you do want to get in. Although, if you do click pay annually, you do save 15%, and it's £5.10p, which isn't too bad at all. And then obviously you can join. And obviously you guys know what I did with the money with the Aviva position. If you do want to see what I'm doing, and I'm about to drop another exclusive video on a stock that I actually really like at the moment that's a little bit more risky. That's about to come on the private group. Obviously you can go see that. But yeah, wanted to update you guys with what I did with my Aviva position, and obviously some of the reasons why I would consider selling a stock. And you can see here, like, I would say a good 60-70% of why I sold this stock is just that I feel like I just don't have the right position size now, and I feel like I've got too many stocks, and unfortunately that's the one that fell on the chopping block. And then a good 30-40% is that I think that there's a good upside baked in here. I would still expect Aviva to perform quite well, but I think I've captured most of the decent upside anyway. So we'll see what happens anyway. Thanks for watching anyway, guys. See you in a bit.